What do most people get wrong about the VCs?
So most people see
There's a lot of shit that can go wrong. For the people that want to get into VCs, if you have to start all over again, what's the process?
So it boils down to three things: your personal brand, your network, and being consistent and persisting in what you do.
Nichanan Kesonpat, a true crypto OG shaped by Silicon Valley energy. UC Berkeley graduate, builder, writer, coder, investor. Her crypto journey started at Instacart when Naval Ravikant spoke about Bitcoin. She went deep fast and wrote essays that gained real attention. In 2017, Naval himself retweeted her work. Nich later contributed to Andreas Antonopoulos Mastering Ethereum, a self-taught developer who also completed coding bootcamp at Consensus organized Ethereum hackathons since 2017, even serving pad thai to Vitalik, active across DAOs from the early days. Today she is a principal at 1KX.
What's the process before you decided to invest in a project?
We have a pretty comprehensive process. Let me walk you through it.
Okay, so here I'm with Nich, principal at 1KX, one of the very top VC in the space. Everyone knows 1KX. She has a very cool background from studying a biology degree at the UC Berkeley, the hub of all the tech space in San Francisco, and then she became a talent acquisition, like a recruiter in SF, and then joining a lot of startups, and then somehow become a developer, and then joining a VC. So right now, if you're a founder, if you need money, then she's the lady that you need to come to ask for the money for. Hey, what's up?
Happy to be here. Haven't done a podcast in a while, but
okay,
yeah.
let's go. So tell me about yourself. What's your background? Like, how do you arrive at this moment?
Yeah. So I was born in Thailand, but I actually moved out of Thailand when I was 7 years old.
Oh wow.
I grew up in the Middle East actually. We lived in Oman for a few years and then Bahrain throughout high school. And after high school, I went to UC Berkeley for my undergraduate. I was always really into biology, so I studied molecular cell biology at UC Berkeley, and then decided to double in psychology as well because I wanted to learn about like how the brain as well as people work. So brain and behavior was kind of my undergraduate studies. But when I graduated, I didn't want to go down the doctor, the medicine path, or like the research graduate school path. So I decided to join the startup world. And with this degree, I was really interested in organizational psychology actually, which is how people in companies or in organizations collaborate with each other. So that's how the talent acquisition, people operations role came about.
Let's step back for a moment.
Yeah.
I want to understand, like, so back then you grew up in Bahrain and Oman, right?
Yeah.
Back then it was nothing. It wasn't like this, right? It wasn't like back then UAE and Qatar is not as cool as that we see now.
Yeah, so the first time I went to Dubai, actually we took a road trip there from Muscat. You can go from Muscat to Dubai in a few hours just driving. And this was around 2002, 2003, and it was just a complete desert. And there was only one like skyscraper there at the time, which is the Burj Khalifa.
Oh, okay.
So that's like the 7-star hotel. This was before I think even Burj Al Arab. But yeah, it's developed
it's
a lot.
like almost nothing.
Yeah, it's almost nothing. But then every year I went back every year, and every year it was like a different city, like new things coming up all the time.
Of course.
Like the next year they had the biggest mall in the world, and then they had the biggest like
the Dubai Mall, right?
Dubai Mall, and then they had the biggest indoor ski park, Ski Dubai.
I like the Atlantis.
Yeah. Yeah, and then a few years later they had Atlantis. Yeah.
Yeah, and right now Qatar, they have like I don't know, like they built for the World Cup, right?
For the World Cup.
It's like the whole different city.
Yeah.
I went to the airport and there's like a monorail like inside the airport.
Yeah, it's insane.
Which is very cool.
Yeah, I would say Oman is still my favorite country
Oh,
in the
I haven't
world,
been yet.
and it's very underrated compared to other Middle Eastern countries.
So what's anything special about that?
Oman.
Yeah.
It's a country where you can get all sorts of climates and environments. So you can get desert, but you can go to the mountains, and there's actually snowfall sometimes on the mountains.
Oh,
You
wow.
have like oasis where it's greenery, and in the valleys it's a lot of greenery and wadis and riverbeds and stuff,
right.
as well as the beach. It's also coastal, so there's good scuba diving and kite surfing there as well.
So it's basically you can do everything.
Yeah. So I grew up like outdoors, basically.
Yeah. And then how was life at UC Berkeley?
It was very. So I was.
Back then, it's like everyone was crazy about like this internet era, right?
Well,
Like
I went
2010.
2012.
Okay.
So in high school, we grew up with like the tail end of MySpace, but it was Facebook, the early days of Facebook. This was before Instagram, so like going in there, it was like Facebook, social media was kind of starting, and then Instagram came a few years after. But yeah, like back then, people wanted to join startups and be in computer science and work like.
Is it like 80% of the like UC Berkeley, Stanford? Everyone want to be like a tech entrepreneur.
Yeah.
Or invest in some.
Yeah, I mean,
some
I
techy
didn't.
Stuff, right?
I didn't. I just wanted to learn about the brain. And I knew going in when I applied, and when I like my first classes, it was just like biology, chemistry, maths. Like.
But I guess like most of your classmates, it's like everyone wants to be a doctor, right?
Yeah, it was a lot of
like
pre-meds.
in the US, you cannot go to the doctor
Yeah.
right away. You have to study something first.
Yeah. So 80% of my classmates were pre-meds. So I had
Oh.
to like academically compete with them for grades and stuff, but I didn't want to be a pre-med. So it was stressful because everyone was like competing against each other, especially Berkeley is graded on a curve, which means they only have like an assigned number of people who could get A's, for example. So it's not like if you get above 90%, you get an A. It's like if you're the top 5%, you get an A. Yeah. So that was stressful.
In the UK, the school system is very different.
Yeah.
You get a 70%, you got an A.
Yeah. I mean, it was kind of a shock. It was kind of a shock for me because I was always sort of like top performer, kind of the top kind of performers in high school. But then in Berkeley, all of a sudden you become like average or below average.
Yeah, same.
So I was like, yeah, that was kind of a wake-up call.
So you have to actually studying, no more party.
Yeah. Well, I partied a bit.
Okay, and then how what's the life after Berkeley?
So after Berkeley, I joined Instacart.
The supermarket
They
thing,
do
right?
grocery delivery. So they had just raised their Series B or C at the time, and joined the tech recruiting team, where I sourced for engineers, data scientists, iOS, Android engineers, and took the first calls with them. So it's like
you have to talk to all the devs, like DevOps, like all this engineers all the time.
Yeah, so that's where I learned about different tech stacks and different skills that a startup would look for in a candidate, because I was facilitating the entire interview process.
Wow.
So I would see all the feedback that the hiring managers and engineers and leadership team would give on a candidate, and there would be specific patterns of like who they would hire and who they would not. So as well as technical skills, a lot of the weight was put on cultural fit. So there were some times where, someone would excel at the technical test, but then not pass on the culture fit.
Yeah.
And in a startup,
culture fit and also like communication skill as well, right?
Yeah. So we would have like a separate stage just to evaluate culture fit, and sometimes people get passed on just from the lack of culture fit.
So how do they test that? Like, what's a good culture fit test?
It depends on the company, right?
Yeah.
Like the person who we would choose to interview for the culture fit would usually be someone that there's rough consensus around the company that they represent like the DNA of the company and what they stand for. Like joining a company is joining like a sports team, right? Like you have to work with each other like on the core business, but you also have to get along.
Yeah.
So it's a lot of soft skills and like subjectiveness involved.
Can't people just bullshit their way into the job, like pretending, fake it until make it? Like how do you actually filter these people? Like how do you know like this guy is like real culture fit versus someone who just like prepare his interview answers, right?
Yeah, well, I mean, we usually, that's why we have probation periods, right? Where there's like a trial period. And like the fake it till you make it thing is tricky and it's nuanced, because faking it until you're making it by like actually genuinely learning it yourself, as opposed to going through some formal education path to get there, is completely fine. Like if you're actually learning it yourself. But then like how quickly can you learn and how quickly can you adapt is more important. But like not outright lying. But you get found out quickly if you're lying.
Okay, so you have been interviewing a lot of engineers and the tech people, and then what's caused you to move from SF to Thailand then? So what's the next step?
So so I actually moved back to Thailand because of visa issues. This was around 2017. So I was actually like completely happy at Instacart in the Bay Area, but I had to move back because of visa reasons. But around that same year, actually, that was when I became interested in crypto.
2017?
2016, 2017.
Oh, wow.
So Instacart, so Naval Ravikant is is an angel investor in Instacart. And we would have fireside chats every week with like people from Silicon Valley and investors and leadership team from Google and things like that to come talk, to do knowledge sharing basically. And I think a few months before I had to move back, Naval came to do one of these fireside chats where he spoke about mainly Bitcoin, but also Ethereum as like this idea of programmable money and permissionless, just permissionless finance and things like that. And that's where I became hooked. Like I didn't have money to like invest in things at the time, but it became
Ethereum was very cheap.
It was very cheap, yeah. It was very cheap. So it was, I don't remember how much it was, maybe like $30 or something.
Yeah.
But yeah, I wasn't really interested in it from like in an investment perspective back then. It was more like I want to learn about this.
So in for the tech.
Yeah, it was very in it for the tech, because I didn't know what it was, right? I didn't know what it was, and I didn't want to blindly just like.
Have you participated in any ICOs during that time?
In 2017, yeah.
Oh.
Yeah. So this was like the era of like Omisego and Chainlink ICO and Flow and so many like just white paper, like people raising on white papers.
Yeah.
But this was, my interest came a little bit before. So Naval got me hooked with his talk. I moved back to Thailand. I had a little bit of time on my hands to sort of, pursue like just learning about it. And that's when I discovered writing. Actually, I started a blog. Like as I was learning about Bitcoin and stuff, I started writing and publishing. Like I just spun up a Squarespace website. And my first blog post was
Nichanan, is that the
that was Nichanan. Yeah. And my first blog post was Bitcoin explained using emojis. This was published in like 2017.
Oh.
And then that was my first like long form piece of writing. It's like a 30-minute read. And I published it, and then Naval reposted it on Twitter.
Oh,
and that was my first thing of being like, oh, like I really enjoy doing this. I don't know where it's gonna go, but I like writing, and people seem to find it helpful. And like the Naval retweet kind of gave a bit of amplification.
He's like the godfather of everything.
Yeah. And then I continued writing, wrote about Ethereum, wrote about decentralized exchanges. Back then I wrote about 0x. This was like the time of Ether Delta. I think it was before Uniswap. I wrote about 0x. I wrote about Mimblewimble or Grin. This was like a Bitcoin-based like privacy thing. Wrote about UTXOs and like dove into how that worked. So it was quite technical.
So like in it for the tech, like Andreas Antonopoulos.
So Andreas is one of those people who like got me into crypto as well. I started following him, reading his content. I contributed to his book called Programming Ethereum.
Oh.
So he had a GitHub where anyone can contribute. And so it's a book now, Mastering Ethereum, and I
have that, yeah.
and I wrote the section on gas.
Oh.
On like how gas on Ethereum works. So so that was published, and then I saw my name on the book as like the contributor, and I was like, oh, like this is proud moment, even though like it's an open source contribution. But,
that's very cool.
Yeah.
We don't have many Thai people like contributing to this space. We need more Thais in this space for sure.
Yeah. So Andreas and Naval I would attribute as like the two people that kind of got me interested. Yeah.
Okay. And then you become a developer?
Yeah. So
that's like a big shift.
Yeah. So after that, I was working for a company called ThoughtWorks, which is a ThoughtWorks.
Okay.
It's a software consultant company. They do a lot of these like digital transformation for big enterprises. And that year they had just opened an office in Thailand. So they're like a 2,000-3,000 people company.
Is it more like Accenture?
It's like that.
Consulting, right?
Yeah. So it's like Accenture. They brought me on as the first local hire. So I was driving like office management, people operations, some recruiting for local hires. Because at the time they just had people come from other offices to do the consulting. But then
so basically your main expertise like help the company to hire.
Basically, yeah. And we also hosted a lot of developer-facing events to build a community in Thailand. So we hosted hackathons, we hosted workshops, like UX workshops, QA workshops, development workshops.
So you're the HR.
Yeah, HR. Like I was doing everything. I was doing like HR, events management. I was like sourcing for caterers and venues.
You know how much money they make, so that's why you want to become one.
Yeah, I mean, and I had just moved back to Thailand, right? So I didn't know caterers or like venues. So it was just very like learn as you go. It was out of G Tower in Rama 9.
Oh, okay.
Yeah. And then I decided to go into crypto full time soon after.
How?
So at the time, there were a lot of small.
This is like 2019.
This is 2018.
Oh, 18.
Yeah. So at the time, there were quite a few like communities popping up in Bangkok doing small meetups. I attended one at KX. It's a building near Wong Vien Yai.
Yeah.
It stands for Knowledge Exchange, but they have a lot of floors and they host a lot of workshops. And there was one dedicated to like fintech and also blockchain. So I worked there. I got a job there as sort of a program manager for the blockchain incubator that they had there. And the focus of this incubator was to help professors commercialize their decentralized tech sort of blockchain ideas. And we brought on and we hosted a lot of events.
It must be very hard because no one understands this thing.
It was really hard at the time.
It's like back then, right?
It was really hard at the time. Yeah.
Everyone thinks it's a scam.
And also the infra wasn't ready.
Yeah.
Like a lot of the ideas that we're seeing now, especially in DPIN, like they were ideas at the time as well. But the infrastructure wasn't ready, and a lot of other issues.
Back then, you tried to decentralize everything, right?
Yeah.
Which and it was something that's not needs to be decentralized.
Yeah, and you would get excited from just reading, and people were raising ICOs just based on websites and white papers, and that was enough at the time. But yeah, at the incubator, we did a lot of large-scale hackathons as well as smaller-scale community meetups.
Yeah.
The biggest one
Thailand?
in Thailand.
What's the name?
I mean, it went under a lot of different names because we would co-host it with different companies. So the hackathon we did Ethereum Bangkok meetup, and we had like Vitalik there. We had because he was in Thailand a lot at the time because he was working with Omisego and Plasma, like Plasma Chain. So these like early optimism guys like Carl and Kevin were with Omisego working on Plasma at the time with Vitalik. And yeah, so we had a lot of the Omisego team come and contribute.
I really know Jaren.
Who?
Jaren.
Oh yeah. So he was there. So he was there too. He probably remembers that. Yeah. So at the time it was really good to host these community events because we brought on sponsors like Omisego, Status, which was a wallet at the time. And
the space is so small that you have to know everyone in basically the whole Thailand. Right?
Yeah, so this was the days of Gnosis. Oh yeah, we had Gnosis as well. They were a prediction market at the time. like Augur, also a prediction market, and then just really early deep in stuff like IPFS, Filecoin, Arweave. And it was a really fun time to be in crypto because it was very technologist and builder focused. And it was almost like every new idea was exciting, and no one was thinking about token and like token pumps.
When I joined in late 2020, I think back then Vitalik says like, oh, prediction market is gonna be big.
Yeah.
Like since then,
Yeah.
and then it's almost like no one has even built that. I think Polymarket used to build on a Polygon back then, but then like no one used it. I think it just gained traction like during the past 2 years.
Yeah.
Right.
Yeah. I think the inflection point was during the election, and that was like their biggest pool ever. But yeah, back then it was very far-fetched, right? The idea of prediction markets, and Augur and Gnosis was the idea seemed very out there, but nevertheless they had ICOs, right? But then Gnosis actually found product market fit, not with the prediction market, but something
multi-sig, right?
Well, yeah, a multi-sig that they built for themselves internally to manage the ICO money. But they open sourced it. It was on the blockchain, and people started forking it and using it to do treasury management themselves, and that's how Safe became a thing. But it's funny, like thinking back to the time how just small of a community it was. We had Vitalik give a workshop to like 30 Thai developers, and he was talking about like 30 Thai. Like it was like in a classroom. It was like in a small classroom at the incubator at the KX venue, and he was on a whiteboard and he was like talking about, oh, this is what it means to have an uncle block. This is the mempool, and it was very like basics Ethereum stuff, but Vitalik was eating it, was teaching it.
But this is in 2018?
This was like in 2018.
So back then Ethereum was like almost like all-time low. It's like 2 digits, right?
Yeah. It's funny, like we also, like I always tell the story, but like we bought him pad thai like for lunch, just as a lunch thing, and he was like eating it, and then he started going red and like coughing and choking, and we thought he was allergic to peanuts. So we were like, are we about to kill Vitalik right now? But it turned out to just be like too spicy. But yeah, that's my like Vitalik story.
Yeah, the Thai spicy is next level.
Yeah.
Okay, and what's next? How you suddenly become a developer?
So
you self-taught or?
Self-taught. So at that time, CryptoKitties had just blown up, and NFTs became
that's
kind
like
of like
first
the
use
headlines.
case of NFTs.
Yeah.
Right?
So we had an idea to do like CryptoKitties and NFTs, but to fund like wildlife conservation. So it was sort of like a social impact sort of use case.
Yeah.
ERC 721 wasn't even finalized as a standard at the time, but already like I was looking at how we might build this thing like through NFTs and a marketplace that would channel a bit of the trading fees to these NGOs' wallets. So that's how I learned Solidity. I joined a boot camp that was run by Consensus at the time. So it was a nice like 8-week course to learn Solidity. And so
the whole point is like you have an idea in mind, you want to build something.
Yeah.
That's the why behind like all learning, self-taught, all this full stack stuff, right?
Yeah. So it wasn't just learning just to learn it, but learning with a goal in mind. And that's the best way, because once you have a goal, then you know when you're like veering off course, right? And then you're like correcting yourself to go back in the right direction. But actually my final project for this Consensus bootcamp was a fantasy football game.
Oh, yeah.
on Ethereum.
Yeah.
So each card was an NFT, and then you would open a pack, and then there would be like this mechanism where you like reveal the pack, and then you would use an oracle to
bet on the real world, right?
Bet on the real world. Yeah. So we use like Chainlink Oracle to read from the Premier League like API.
Yeah.
And then feed it in and like see what score you get. So that was my first like project, my first dab.
That's very interesting.
Yeah, and so that's how I learned smart contract development, and then worked on the NFT, the endangered wildlife project for a few years, just over a year,
But seems like back then no one really know like smart contract engineering, right? It's like it's a super new stuff.
It's super new. Not a lot of resources available online. So
it's like the projects must be really struggling to find smart contract engineers, right?
Yeah, it was also hard because we were like Solidity itself was always developing, and Ethereum itself was always developing, and then you have to wait for things to be on testnet. You have to wait for like Chainlink to be ready for that if you're going to use an Oracle. You have to wait for other smart contract, other protocols to be ready if you're
Basically,
using.
the infrastructure is not as well developed as today, right?
Yeah.
So you have to wait for that and that.
Yeah. So it's not just like npm install whatever and you're ready to go. You have to go on GitHub and like submit issues, and then the team would look at it, and then
That's the cost of being early.
Yeah, but nowadays, like what used to take me 2 weeks would now just be,
1 day.
Like out of the box. Yeah, exactly.
Yeah.
But yeah, learned a lot, and then through that and through like hosting hackathons and the Consensus Bootcamp, I met a few people who had like projects at the time, so that's how I started freelancing as a developer. Yeah. And then 2020, or right in the middle of the COVID pandemic, I got into DAOs. DAOs were like very much the hype at the time, and I was spending all day on Discord and Twitter just joining DAOs and like learning about them. Was an early part of a DAO called Metagamma Delta. We were giving grants to women-led Web3 projects. So we would like raise money from other DAOs or other individuals, and as well as ourselves, and then multiply that through Gitcoin grants, and then basically give people grants out of that. So that was the DAO space, and that's where I met Peter Pan, who's
1KX right now.
A partner at 1KX right now.
I remember Peter Pan was like super big in DAOs, right? I think he wrote so many articles.
Yeah.
I watched him at Bangless, I think.
So he wanted to join Moloch DAO, which was the biggest Ethereum-based DAO at the time, focus on funding open source projects and public goods. He actually got rejected from Moloch DAO, so he spun up his own called Metacartel. So Metacartel was a grants DAO as well, and then Metagamma Delta spun out of that to focus on like women-led projects. So I was like a part of that community, which opened a lot of doors actually, because the community at the time was very small and people were all working on.
How small is the community? So like 100?
Like sub 100, but the really active members, it was like 30 to 50 people.
So it's like a weekly call.
It's a weekly call.
Very active, people active in the chats.
Yeah, it was a weekly call, people very active, like governance nerds, like technologist nerds, governance nerds, public goods. It wasn't very like money driven as it is now, the way it is now, but it was very like, let's explore new ideas and like new ways of doing things. And it was a fun time. But I was quarantining in Pattaya at the time, and my sleep schedule would be just I would go to bed at like 6 a.m. to stay up for these calls. Yeah, for these calls, but it didn't really matter because everyone was in quarantine. But yeah. And then, so I met Peter through the DAOs, but 1KX was like four people at the time. It was the founding partners, Peter and another partner, Dimitri. But, so he reached out to me because he had found my blog, the articles that I published.
Oh, right.
And he was like, like 1KX was essentially looking for someone to do this, but for the fund.
So it's because they see your content, like a long form content online, and it's because you also in the DAO. I think that's opened the doors, right?
Yeah. And some other stuff like building a developer community as well. So like, yeah, 1KX used to do a lot of these hackathons and developer-focused events and side events during these conferences. So when I first joined, a part of my role would be to do that. So we did virtual hackathons, in-person hackathons, hacker houses. So I would.
But that's like the way to get into the early stages.
Yeah.
Projects, right? It's like one of the best way.
Yeah. So up until 2022, 2023, I was hosting these hacker houses with 1KX, and I would like be staying in a big house like with like 12 developers. That was participating in the hackathon.
So like a very nerdy hacker house.
Yeah.
Okay, that's it. So basically that's the story of someone who's like study biology and then become a recruiter, and then she sees that the devs make so much money, then she self-taught to be a developer, right?
Yeah.
And then you hang out with all the crypto folks. These guys somehow raise so much money from the VCs.
Yeah.
So the next step should be the VC yourself.
Yeah.
Okay.
So like full circle.
Okay. So for all the beginners out there, so what does a VC even do?
Yeah. So the basic answer that people already know is that we invest in founders and assets. So specifically to us, we invest in Web3 crypto-related startups and projects, as well as crypto tokens. I mean, in terms of, but I mean, there's more to investing than that, right? It's about formulating a belief that you have about the world, a thesis, and then putting money where your beliefs are.
Put your money where your mouth is.
Put your money where your mouth is.
Everyone can talk bullshit about anyone, but you actually you believe in a thesis and you actually put the money on it, which is good.
Yeah, and having skin in the game.
Yeah, of course.
And we invest, and which is not to be confused with trading. It's a very different mindset, investing and trading. Usually much longer time horizons. You have to almost enter into a marriage with the founders that you're investing in, especially in early stage.
Because of the vesting schedule condition, like you cannot get out around 4 years?
Yeah, because of the vesting schedule, and usually, especially in early stage, the product hasn't found product market fit yet. They only have, their first cohort of users, and they still have a lot of things to navigate through, and there's a lot of unknowns before you become successful, right? Or before like the returns kind of come about.
So basically, essentially, you are taking money from like the high net worth people, and then you form a fund, and you invest in so many projects, right?
Mm-hmm. Yeah.
Which is like the typical success rate. Is it like? But I think the misconception people have about VC is that you guys are getting so early that it's almost like very difficult to lose money. It's like as you're in the early days, right? It's like you invest at such low valuation. Yeah. In the sense that it's very hard to lose money if you can get in very early.
I mean, the projects, if it's too early and the valuation doesn't really matter if the project ends up going to zero, right? Yeah. It doesn't matter if you're getting in at 30 or 200 or if it fails, then it's a zero at the end of the day. Like when you're getting in earlier, like you're taking on more risk and you're compensated for that risk with the lower valuation. So valuation is like one of the things we consider, but it doesn't make or break like a decision. Usually it's like the founding team or the product and just the fundamentals of the business. Yeah.
Let's say you invest in like 100 startups, so it's like you're throwing 1% of your money into 100, right? And then like one become like a super unicorn, so you basically like 50x your money. Do they kind of like doing risk management? Like you have to sell the position to make sure that it's like not too big in the portfolio?
That's more of a liquid. Yeah, it's more of a liquid, a liquid consideration to manage our liquid books once they have tokens. But on the venture side, we're usually just doing the
long-term stuff.
Yeah, the longer-term stuff, like with multi-year time horizons.
Is there any difference between like a crypto VC and traditional VC, like a tech VCs?
Yeah. So the time horizon for crypto has traditionally been shorter. So instead of like the 5 to 7 or to 10 years of traditional VCs. In crypto, it's more like 3 to 5.
Because crypto people think they
just have a very they just have short time horizons, but then it's also their path to like tokenization might be shorter as well. But yeah, besides the time horizon, it's you have the tokenization aspect into account as well, because that can be like an additional value accrual mechanism because you're investing into a network as opposed to just the company. But usually, at the stage we're investing in, it's pre-token, and whether they plan on tokenizing or not, that's like a separate matter. But usually, it's like a safe and token warrant. But we do like pure equity companies as well.
So right now, what's the meta right now? Is it like equity? Is it token? What's in your views, like which one is safer, or how do you think about like token versus equity?
I mean, I would say the majority of our investments are safe plus token warrant, and the thinking is usually around, does this product make sense as a network, or can it be successful just like as a traditional company?
Safe and token warrant.
Yeah.
Token warrant is more like a call option, right?
It's like
similar.
Yeah, I mean it's like if the token, if they have a token, then we have the rights to it.
Oh, okay.
Yeah.
Okay, so what's a typical like misconception that most people get wrong about the VCs? Are they evil?
I mean, at face value, I see people usually see VCs as like, we have the money and then we have all the power to invest in whatever we want.
Yeah.
But
only the big ones.
Only the big ones.
Only the tier ones.
Yeah, but I mean, like VCs have people to answer to as well. Like people don't really think about it this way, but VCs have customers too, and they also have a product. Their product is the fund, right? And the customers are the people who invest in the fund. And the VC's job is to decide on where to allocate that capital. The VC's job is to formulate a thesis, and then put our money, put skin in the game, and then hopefully the product becomes successful. Fund returns. So it's not like we're just partying and just throwing money wherever and then dumping tokens. So yeah, that's where I think that's.
But I mean, like looking at the business perspective, right? You guys have to make money to satisfy your investors.
Yeah.
And then if you get in something that is very cheap, and then it's like 100x, it's very natural to just sell it, right? To kind of like risk management to make sure that you have to get out.
Yeah, I mean,
I think it's normal.
Yeah, I mean, but the incentives have to align somehow, right? So if our selling the token is going to wreck the project, then it's like detrimental in the long term, because if you're known as a VC who does that, then you can only get away with that once.
Yeah.
And then good projects aren't going to want you in the next time around, right? So it's a lot of like long-term, second order thinking as well before we do any of these harmful stuff.
So the best way is to continue to sell slowly.
The best way is to manage it in a way that doesn't harm the project. Yeah.
Okay.
Yeah.
So how do you do it then? Sell slowly? Make sure that the token price is like.
I'm not in charge of the liquid books.
Instead of like a big red candle.
Yeah, we don't do that. Anyway, it's not my department. And then take it to further DD. So it's a lot of like calls and research-based stuff.
Let's start from this for those of you who don't know, right? So it's like, from my understanding, you have 3 parts. The first part is like deal sourcing. It's like you go party, maybe to the KTV, maybe you go to like side events, hackathon, right? You have to find the projects, find the early projects, right? And then okay, you have the leads. Now you have to like decide how many you want to invest, right? So this is come with the due diligence.
Yeah.
And then after that, it's like, oh, you already invested. It's like, what's the support? What's the post-token support?
Yeah, right? Well, not post-investment support.
Post-investment, yeah.
Okay, well, the meta of it is not like day-to-day, but more like the end-to-end process. From the deal sourcing part, the deals can come from people that we meet at events. So that's why we go to conferences,
Founders,
hackathons, and things like that. It can come from our network of existing portfolio founders. It can come from fellow funds who want to co-invest, or if it's something that's too early or too late for them, then they pass the deal on to us. It can come from incubators and accelerators that's focused on different themes or markets or like regions. So yeah, these are kind of the deal source, deal flow.
Is a referral fees for this?
Referral? No, typically no.
Fees.
It's very informal.
So let's say like I run so many hackathons, like I know so many cool projects, and then I pass on to you.
No,
do you get anything?
It's typically informal.
Oh.
Yeah, because it's like we do the same as well. It's like deal sharing.
Okay.
Yeah.
Okay.
So they come through our pipeline. We have an internal tool that looks at the ongoing deals. So at the very early stage of that funnel is deck review, typically. So I look at the projects that have been assigned to me, and the way we assign it to people is through different markets. So each individual on the investment team has different market sectors that they focus on. My area is more like middleware, DePIN, and wallets. And yeah, so we review the deck. We take the first call with the founders, and then do additional due diligence on our own, and then bring it up in wider IC or investment committee calls.
What's the exact process? Let's say you meet me at a conference, like day one, right? Okay.
Yeah.
Oh, this guy has some interesting project.
Yeah.
Okay.
So
and
we
then,
meet.
Okay.
Yeah, we meet. You send me like materials that
send
I
you
can.
send you material, and then you're interested first.
Yeah,
and
I'm
then we
interested.
have like a call.
Yeah.
And then I just pitch to you.
Yeah.
Okay.
I mean, it doesn't necessarily have to be a formal pitch where it's like one way, but it could be more of a conversation.
Yeah.
Usually it's better if it's more of a conversation, but there's like kind of basic things that I have to answer, like the who are you, the what is the project, you know, the like why is the right timing, the right market, and then just the details of the round, like how much you want to raise and so on. So that's kind of the basic information that I want to relay to IC, because that's the first time that they're hearing about it, and I need to kind of bring everyone up to speed on what this is and why it's exciting.
So it's like you're like the first mini boss, right? And then the IC is the second boss.
Yeah, I guess, yeah.
And then and what's happening at the IC?
So we discuss internally, you know, like so let's say the person who's bringing in the deal talks about the project, pitches the project.
Yeah.
And then there might be questions around like how confident are we that they're the best team to back in this market? How confident are we that this is the right way to approach this market, that this is the right go-to-market traction, things like that. And then at the first IC, we can decide to pass, or we decide to move it forward, in which case we try to get these additional questions answered, which can involve, you know, additional questions to the founder. It can involve having customer calls for customer due diligence. And yeah, that's the next step.
Okay, so you talk to the founder. It's like in a networking event or whatever, and then like a proper pitch, maybe like an hour call.
Yeah.
If that passed, you go to the IC. How many people in the IC though? Depends.
There's 8 of us.
8?
Yeah.
What if 4 agrees and 4 disagree?
Well, there's 8 of us in. We call it the advisory committee. The investment team is the one who gets the vote. So that, like, those are the partners.
It has to be odd number, right?
Yeah. So we have a voting system, like a numerical one on a scale, and then like people vote anonymously, and then it has to reach a certain numerical threshold for it to pass. Yeah.
So like very quantitative side of things.
Well, it's decisive, right?
Yeah.
It's something where you're not like still undecisive of it's a yes or no, but that's usually the final vote. We don't vote like every IC on one project. Yeah.
So for example, it's like 5 people can vote. 1 people give it a score 1 to 5. So maybe total is 25. It has to reach 20 for this to be a pass, right? Something around there, right?
Well, it's 4 voting members.
Okay.
Yeah. But the way our scoring system works is that it's either you have to reach a certain number for it to go forward, and there's no ambiguity.
Okay.
Yeah.
Ah, okay.
Yeah.
Okay, so let's say I see pass. Let's say it reaches that certain number.
That's the final step, though.
Oh, okay.
So if that passes the numerical voting, then we give a term sheet.
That's it. Oh, okay.
But that comes like at the final step. It usually takes 2 weeks, maybe 3, to do this back and forth like discussion and follow-up questions.
Let's say the term sheet is like you are okay with 30 mil valuation. Do you try to like negotiate with the founder to make sure it's not 30, it's like 20? Do you like try to, because you have to get it as cheap as possible, right?
Invest and that's it, and we wait for it to go up. But that's only the first step, right? To getting the right deals and then winning them. The majority of the work actually comes after we invest, which is actually working with the projects and working with the founders. And this can be anything from helping them navigate, the changing market landscape, regulatory environment, the changing user interests. Like people in crypto definitely has a shorter attention span than
go-to-market strategy.
Go-to-market strategy.
Content. Business model,
them,
everything.
Yeah, connecting them with. Well, they usually have a business model already. We just give them support in terms of connecting them to the right people, and this can be people within the portfolio itself. So we have a founder network that's really strong because they're on different layers of the stack with different backgrounds.
So basically, you guys are value added.
That's part of the value add, yeah. And then
to the project.
Yeah. And then we have a really good tokenization team that helps with tokenomics and protocol design, incentive design, emissions, and things like that. That's very, very data driven. We call it internally we call them the data team. So they pull in on-chain data, aggregate on-chain data, and basically tell projects how to design a token in a sustainable way. Yeah. We actually just published a revenue report on on-chain revenues, and we're basically making the argument that the on-chain economy is a $20 billion economy at the moment. So when people are asking, does crypto have any value? That's the purpose of the report is to use on-chain data to make the argument that yes, it is, and it's growing.
It's 20 billion because you mean the revenue to the token holders, right?
The revenue to the protocols. So how the protocol shares revenue to token holders is different per protocol, but this is on-chain revenues.
How much money they make, right?
The protocols make.
From everything? Is it only 20 bill?
Is it what?
Is it only 20 bill?
Yeah, mainly
project,
for on-chain. Yeah, it's mainly in
excluding
DeFi right now.
Tether, right?
Excluding
Tether.
Yeah, so a lot of it is in DeFi right now.
Okay.
Yeah, DeFi and then applications, and then DeFi application and wallets, and then a small portion of that is DePIN still.
Okay.
Yeah. So the majority is still DeFi.
Tether has so much money. They make so much money.
I mean, it's not on-chain revenues from treasury. It's not on-chain revenues from treasury yields, right? Yeah.
Okay. Yeah. So it did not count because it's on-chain, I guess.
It's on-chain, observable revenues, yeah.
So basically, TLDR is basically a lot of upside for the on-chain economy.
Yeah.
Right. Okay. So basically, it's 3 steps: deal sourcing, due diligence, and then
post-investment.
Post-investment.
Yeah.
How do you split in the VCs? How do you split? Is it 50% sourcing, 20% due diligence, and 30% if you have to give a percentage to the workload?
I would say it differs between individuals, but for me, it would be 20% sourcing, because that's usually volume based, and usually it aggregates around one certain event or an ongoing thing, sharing deals with other people in the network. A lot of it is due diligence because that's always ongoing. It's more focused work. And then portfolio support is, as needed. So there's certain times where a portfolio company might need more help than other times where they're just like doing, business as usual. So the times that they might need support from us are when they're gonna raise a new round. So this is like helping them craft the narrative, the pitch that they wanna communicate to the next investors. It could be connecting them with investors, like reaching out to our network to see who would take a chat. It would be navigating. It could be navigating a pivot. It could be navigating a changing landscape. So it depends on the.
So your focus is more due diligence. It's more like you cut through all the bullshit. It's like yes or no, or like suggest them about like how they can pitch better.
Yeah. Well, I mean the majority. The main workload of the due diligence is that I want to get to a certain confidence level that this is a project that we should invest in, so that I can then try to convince IC and then like we vote and so on. So that's the due diligence. So so I try to gather as much relevant information as possible to get myself to that confidence level, whether it's confidence on that this is the right market to be in and right time to enter that, and that this is the right approach to win in that market, and whether this is the right team to do it. And if their traction, and this is like looking at their traction, looking at their the user demographics. If the majority of their traction is just coming from airdrop farmers, then we might discount that a little bit. Like we'll look at retention and seeing what the users are coming to them to do. For something like Deepen, which is a lot more fundamentals driven, because at the end of the day,
so you can look at traction, you can look how many dash cam install, how many the physical device install.
Yeah, and then I can also do competitor analysis between this Deepen project and incumbents in Web 2, because usually you have the Web 2 comps.
Yeah.
So it depends on the market, and it depends on the layer of the stack as well.
Is being a VC as cool as what most people think?
What do most people think?
They think it's like a very prestigious. It's like you guys make a lot of money, you guys get it early, you can just dump all the tokens and make money.
That's what people think. It's not.
So you don't make as much as people think.
We manage a lot of money. And with that comes a lot of responsibilities, because it's not like we're beholden to the investors, right? And we're beholden to the fund mandates. So it's actually a lot of dotting T's and crossing T's and dotting the I's, and making sure that you're here and for the long term, which means like capital is one thing, but like reputation is also really important. So you can't just like dump and then make money, but then also like ruin your reputation for the next time round.
Yeah.
So it is a really long-term game. I think like the thing that I enjoy most about it, compared to when I was a builder, is that when I was coding, I was it was like I had tunnel vision into like the problem that I was solving in the code right then. So it was like very narrow focus. I think the privilege that I have now as a VC is the high level kind of seeing everything that's happening, and then just like choosing where to focus my attention and time, and then like being able to invest in them and like place bets.
Okay, so for people that really want to join a VC, so what's your advice for them? So I think you break into the VC that you start writing some online. So you have you build your personal brand through long form, and then you join a DAO, like a small community. That's how Peter Pan found you, right?
So the writing was how I built my brand, and then the DAO was how I built my network. So you don't necessarily have to write and then join a DAO, but definitely build your brand and build your network somehow. So this can be writing, it could be, I don't know, I would say like writing and publishing and putting your thoughts out there in public is the best way for people to know about you, because if you're not publicizing then how are people supposed to know about you, right? But it doesn't have to be writing. It could be like, YouTube, content creation. It could be tweeting, thoughtful threads. It could be, TikTok, even. Just find your platform.
TikTok probably bad. That's more like a KOL path, right?
Well, not necessarily. Like if it's educational content where you're like evaluating a project and then coming up with a thesis on how this market is going to go, and just your thoughts on the team and things like that. It's basically what you do as a VC, right? So you're doing the work already, you're just publicizing it. You even have more freedom in some ways to say what you want to say and be honest than if you were with like a big fund, because now you have to consider like perception and things like that. But yeah, like as an individual content creator, you have a lot of freedom to explore the medium that best suits you and your voice, finding your voice basically.
So you have to start again right now. Let's say you just in crypto for 3 months, like pretty new right now.
Yeah.
So what's the best way?
If I had budget to travel, I would go to cities where there's a lot of fellow crypto founders. Like right now, a lot of AI people are flocking to SF because that's where the concentration of AI innovation and research and people are gathering. For crypto, I think there's a few places.
Singapore.
There's New York. There's New York. There's Singapore is one, but I think like New York is kind of like the top place that I would name right now to be in crypto. But if you don't have the opportunity to travel, then you would just go to meetups, you would go to like whatever local events that people are putting on to just know what's out there. And you never know who you'll meet, right? But yeah, that's more of a...
So put yourself out there a lot, go to events.
Yeah.
Okay.
Just increase your surface area of meeting the right person or being seen by the right person. Yeah.
How about content? Are you still doing like long form Substack, long form Medium, or growing your Twitter account? Like what's
I haven't done long form in a while, especially not on my own blog. So ever since joining 1KX, actually, I've been publishing my long form through 1KX. So the type of content I publish are like market landscapes and deep dives into different verticals. So I read
your DAO tooling, like the
DAO
the
tooling
long one.
was one of my first ones. DAO tooling, I wrote one on wallet infrastructure, on NFT finance, on dynamic NFTs, and then a bunch of memos on why we're excited about particular projects that we invested in.
So basically, it's like the skill that you write as like a solo content creator, it's gonna transfer to writing a memo at the VCs, right? So it's more like a writing.
Yeah, I mean that's
clear and concise skills.
Yeah, I mean that's the external transferable skill, right? But then the internal skill that you're developing through writing and creating content is crystallizing your thoughts in a way that is graspable by people, and you'll find your audience through that, and then hone the way you communicate based on like the feedback that the audience is giving you.
Okay. So let's say you start a crypto journey for 3 months.
Yeah.
You've been going out like, I don't know, like once, twice a week. You've been publishing content once a week. So right now it's like, I don't know, 1 year right now, you still cannot find a job. So what's the next step?
But the job you're trying to get is to be a VC?
To get into VCs. What do they look at? So they look at your online like on-chain
I mean,
on-chain?
not really on-chain.
Not really on-chain, right? So it's more like writing.
More like writing and sort of portfolio if you have one. Not financial portfolio, but more like content and brand, like your presence, right? Because at the end of the day, how people find out about the VC is like if you have some blog post or something that they gravitate towards. Let's say you're publishing a thesis on where you think a certain market is going, and then a founder stumbles upon that, and then they're like, oh, we're building something that matches your thesis, then they'll reach out to you, right? So that's why presence is important. What was the question?
So the question is how, if you have to start over again, if you're like, let's say you're a student or you are in crypto for 2-3 years and you want to get into VC, if that's your ultimate goal, so what's the step?
It's hard for me to say because I almost fell into this role like organically. I would say become an operator first. Like first of all, like why do they want to become a VC? Like do they want the exposure? Do they want the lifestyle? Do they want to, like what do they want out of like the VC job, right? I think
most people think it's much better than it is. It looks like a glamorous, prestigious stuff.
Yeah, I would say try to get some experience first as an operator, like being a part of a company and seeing the other side and see how it works. Because a big part of the job with VCs is to help founders navigate what's happening, what's going on in their companies, right? Whether that's hiring or fundraising or like whatever it is, a strategy. So if you have operator experience within a startup that's growing and you're like an early employee, or if you want to
that's more benefits than a bigger company, right?
Yeah, because you're learning everything at once and you're wearing a lot of different hats. And so you have, and then you develop the skill to be versatile in the types of problems that you're solving, and you learn a lot that way. So I would say, like, join a startup and see how it works from the other side would make you a much more effective VC. Especially if you become a founder first, then you'll have to think a lot about, okay, where is the world going? What do I believe about how the world is going to get there, and what product can I build? What service can I build?
Any specific area like BDs or PM or marketing? Is there any specific division that has an edge before the VCs? Because operator is a big, right?
Yeah, I mean, it could be like operations. It could be like product lead. BD gets you really good at sales, right? And it develops your.
Because I see a lot of people from VCs. They have a strong network, right? And most of the people that have strong network, they're BDs. So the company fly them to basically like bunch of events. Maybe that's the way. But that's from the deal sourcing perspective.
It's from the deal sourcing perspective.
Yeah.
Some VCs have PhDs as well. They're very technical, or they were protocol leads or like engineers before. So it just depends on what your strengths are. It doesn't have necessarily to be BD.
So BD probably deal sourcing. Due diligence probably investment banker.
But like BD connects with other BDs, right?
Yeah.
Like it's not necessarily like the right people. So it really depends. There's no one specific department. As long as you have
bring the value to the table.
Yeah, as long as you have proven to have taken ownership towards a particular goal and then like got it there. Doesn't matter what like department that was.
Like when you interview for like an analyst role, like have you interviewed the analyst? Like what is there any like red flags or like I don't like this guy, I like this guy?
I'm not a part of the interviewing process for analysts, but the most important indicator that we have as part of the interview process is the test task.
Test task?
Test, like a test task. So we give them a task, like a prompt, let's say, to evaluate certain projects. Basically to give them a task that we do, right, to see how they do it. So the best indicator of like a good employee or team member is for them to actually do it and see if they do well. It's not about like the conversations, establishing rapport is like one thing, but then at the end of the day, it's like about how they actually execute. So it might be a task to do, to come up with an investment decision on XYZ, given this context. So we give them like some materials to review, and then
so it's like a case interview, basically.
Kind of, yeah.
Oh.
Yeah. So when I joined 1KX, they gave me the task of like writing a memo for an investment. Yeah.
Yeah,
So
I think that's
the
interesting.
task. Yeah.
Because it's actually like so it's basically what you actually do on the job.
Yeah, exactly.
But they give you as like the intern thing.
Yeah.
Oh, this is very interesting. Is other VC do that?
I don't know. I hope so. I'm not sure what the other process is. But even like when I was interviewing for engineers, we gave them coding tasks.
Yeah. Like a take-home test.
A take-home test. Yeah.
So there's no like the lead code style.
No. It's something that it's not a random like lead code thing, right? At Instacart, it was like actually to do with like groceries or and, like data, and that's applicable to the job. That's like similar to what they'll be doing on the job. Yeah.
Okay, so basically the answer is like you can come from a bunch of different background, but operator first. And operator, you can join a startup, you can be a PM, you can be growth, you can be BDs, right? Mm-hmm. So probably like each background would probably show you there's some skills that's transferable to the VCs. If it's like post token, probably growth helps, BD helps.
Yeah.
If it's like due diligence, maybe investment banking career. So I see a lot of investment bankers. They are investment banker first and become a VCs. What's the pros on that? Like pros and cons?
In the early days of crypto, there wasn't a lot of investment bankers who then turned crypto VCs, just because the framework that you have in investment banking is very different than the mindset you have as a crypto VC.
Yeah.
Usually, for an industry that's like super early, it's almost a risk to be so to have so much expertise in a very developed traditional market, because then the frameworks and the mental models that you have are almost like defaulting to that. Whereas in something like crypto, you have to break out of that and think in a different way. So that's why there's so many different paths to becoming a crypto investor or like VC or like being in this space, even as a founder in this space, because it's so multidisciplinary and it's not just about finance. But that's how they
try to use like a DCF valuation for everything.
Yeah, no,
even
exactly.
like AI, they try to like rationalize creating some bullshit model, which they can't, right?
Yeah, exactly. But then like the fact that the traditional finance people are now coming into crypto is a good sign that the industry is maturing, because instead of like these really niche sort of 0 to 1 things like DAOs and things like that, now we have stablecoin adoption and payments. Yeah, stablecoin adoption and payments and things like that. So if a fund wants to make investments in this category, then that's where the traditional finance experience might come in handy, because then you're not in evaluating like a crypto payments or a stablecoin project. The market is not isolated.
It's maturing into like a
it's not isolated to just degens and decentralization maxis anymore. You have to work with PSPs and banks and get these licenses and blah blah blah, and that's where like the TradFi experience comes in. Yeah.
How important is the crypto native experience right now?
It depends on your market.
Do you look at their like on-chain activities?
No, I mean,
do you ask like what do they do, what yield farming protocol they use? Because surely I see a lot of people from investment banking background, they have no ideas like what's happening inside, like what's happening on chain. I feel like that's going to be a big disadvantages.
Yeah,
right?
I mean, it depends on their market focus, right? If they are gonna be looking at crypto consumer, then crypto native is very important, because you don't just want to look for like a TikTok clone but on the blockchain. You want to look at pure. You want to look at like new primitives within crypto and new ways that that people interact with applications. So that's where crypto native and on-chain stuff gives you an edge, because you're not, again, like your mindset is not calcified in these like old, like traditional ways of Web 2 thinking, and it's you can be more creative in terms of what you get excited about. But if you're, I see this a lot with deep end founders, is that usually they're not crypto native. They're usually very successful, like industry veterans in whatever industry they're from. It could be.
But I think that's an edge, right? That's an exception of like, because it's like real world based.
Yeah.
Yeah.
But then we're seeing that now with DeFi. Like in like a few years ago, like Hayden didn't have a finance background, right? And he built one of the most important primitives in DeFi. So that cohort was where, it's like very builder hacking on new crypto primitives.
Yeah.
But now DeFi has matured to RWAs and stablecoins and payments, and
you need someone with a TradFi experience.
Yeah, and so now we're seeing
who deal with the SEC also.
Yeah,
right?
exactly. So now we're seeing founders who have been at hedge funds, at quant funds, and things like that. And just like the persona of founders is different now. And they might not be crypto native, but they understand that vertical within crypto to be successful in the vertical that they're focused on.
So with your background, what's a skill that you think are like the most helpful, that transition from your experience into like the real world?
Writing, I think, would be number one.
Okay.
Because I'm not writing just for an external audience like Twitter, but also writing and communicating clearly for internal as well. Because the founder, the founder usually gives me a data room or their deck materials that I have to then distill to then craft a message that I then relay to the rest of the team and try to communicate why I'm excited or my thoughts on the project. And
can ChatGPT help with that? That's maybe like a noob question.
I think because ChatGPT came like. I didn't rely on ChatGPT when I was learning this. It's just by force of habit that I'm not really using ChatGPT now. I use ChatGPT to like help me do quick research and bounce ideas. But in terms of communication, I find it more natural for me to just do it in my head and communicate it. I don't rely on ChatGPT too much to do the message crafting, because I find that it does a worse job than I do. Indirectly is recruiting.
Yeah. First I thought that's gonna be number one, because most of the founder, they have like, maybe they're good at coding, maybe they can identify the problem, but they probably struggle to find talent, right? That's where you can come in. So
I definitely help like relay a job opportunity with a portfolio company, but I usually don't take the first call with a potential candidate for a portfolio company. But what I mean when I say recruiting as a useful skill is like when I'm talking to founders, that's usually my first impression of them. And that's a lot of what recruiting and interviewing is like just reading people and gauging the vibes.
Read people.
Yeah, just like gauging their vibe and being able to ask the right questions. I think is a skill that I had developed before I joined a VC, and that's useful now.
Yeah, I think that makes sense. So you can help founder to get talent, and you can also help them like what recruiting firms should they use.
We connect them with recruiting firms sometimes as well. So we have a handful of firms that we relay founders to, and they're usually focused on different verticals or regions.
So what's the career path of VC? Like, is it? I saw a lot of them becoming a founder.
Yeah.
Or they just like leave the space or do something else.
Yeah. That's usually so. It depends. It depends, right? they get into VCs by being an operator first, and then they're a VC, and then they climb up sort of the VC ladder, first being an analyst, and then they work their way up to becoming a partner with different ownership and responsibilities. And sometimes people just have the itch to go build again, and they just flip back to the other side.
Or just give up, just quit this job. Just go to do something else.
Well, the something else is probably building something, right? Yeah.
No, some people just choose something unrelated to crypto, right?
Yeah. Oh, yeah. I mean, that too.
Just give up the industry as a whole.
I mean that too, I guess.
Yeah.
But then they go build something.
Yeah. So basically, I see like the career path is like, okay, you climb up the VC ladder to become like a partner, or like network with some founder, and then maybe they figure out that they can make more money being a project founder, which is like the second path. Yeah,
I mean, I've seen, we're seeing a lot of like different flavors, right? But if you look at traditional VCs, it's usually, people are there for years and years with one firm, because that's usually the time frame that you have from like a startup to go from early stage to IPO or these exits.
Is there any edge that, let's say you see a founder who has a VC background, like ex-VC, that turned into a founder? Is there any advantage?
It depends on what work they did with that VC. Usually if it's a short tenure, then it's not really indicative of anything. Because what you're looking for in a founder really is builder experience, like product experience, leadership experience. If they have a VC background, then most likely they have a co-founder that will build the product or are like really good technically or will have really good go-to-market.
So they're more like a business guy, right?
So the VC would be more like a business founder, yeah.
So what's the typical path? You join a VC as an analyst, and then you just climb up, analyst, associate, principal, and then partner, right? Yeah,
so that's the typical, I guess, title ladder. But the fund itself matures as well. So you might have a really small fund in the beginning, and you're an analyst, and then the fund grows. And then you grow like in your role with the fund, and then the fund might like expand their investment focus. So this might be in terms of vertical. So you might start off with crypto, but now like with things like stablecoin payments and things like that, they might expand to general fintech, or they might expand to AI. And they're just like less crypto native, right? And they just have different investment mandates and focuses and topics that they do, and then they would hire new people to.
Is there like a set of? Is there like a setting? What do you call like a transparent criteria from someone to got promoted from associate to partner?
Mm-hmm. Yeah.
There is, right? Is it about the revenue they bring, or?
It's more about. Yeah,
How much money they bring?
It depends on the fund.
Yeah.
Yeah, it depends on the fund. It's hard because like if you're just driven on those sort of returns KPIs, then if you're focused on different markets, then it's not really an even playing field between everyone, right? Because if your market has more liquid tokens or like they just go to market faster, then the numbers are more clear. But it could be just like about the level of ownership that you have in taking a portfolio company to the next stage, whether that's like through raising additional rounds or tokenizing or getting acquired, or just the impact that you have that might not be reflected
in the revenue wise
equally in the revenue. Yeah.
Okay, so I guess 1KX focus on the early stage, right? So early stage is more like there's not many revenue, so it's pre-revenue. So you look at the traction, you look at the founder first, because product and things later you can pivot, right? Mm-hmm. So you probably meet a lot of founders. The question is like, how do you actually like know who should you invest?
Yeah. So before,
is there any like red flags, like, oh, the founder, they come, they say this, it's like they are like scammy founder? Like, how do you tell?
if someone is really a scammer, like from the first call, it's not going to be that evident. It usually comes up later. Only a small percentage are like, okay, this doesn't feel right, and you can tell that from the first call, but that's like the minority. But for most founders who aren't scammers, the thing that we look for before product market fit, which usually isn't there yet with early stage companies, which is okay, is founder market fit. So does the founder have the right profile to be building in that market? Does he have an edge over other founders who might also compete building in that and build in that market? And then can they communicate their vision well? Are they ambitious enough in their vision such that when we're like evaluating the potential returns of this project, like does the founder have a vision that gives them a shot at that outcome? Because if they're not ambitious or they're just like building a product just to build a product without a clear vision for it, then they're going to get outcompeted by people with a really strong vision.
But the question is like, how do you know? How do you know someone is like real ambitious versus someone who's like pretending to be, right? Just to get your money. I think it's a pretty difficult one.
I think the more founders you speak to, the more you can pattern recognize. And it's usually a gut instinct that you develop after speaking to so many people. And you can tell. Yeah, and it's a gut instinct that comes with just speaking to a lot of
any specific questions that you like help other like new coming VCs, like spotting the right project, spotting the right founder? I mean, like some people, some founders, they're not scammy in the sense they want to build the product, but it's like their why is not as strong, right? It's like, I want to build because I want to raise money that's it. It's like they don't have like a deep passion on this yet, right? The question is like, how do you distinguish the two? Is it just like the body language, how they talk?
So usually if a founder has worked on many different projects before, but let's say none of those have taken off, but all of them have been in categories that just happen to be a hot narrative at the time, and then they just pivot from one narrative to another.
Okay.
So like jumpiness is one indicator of like, are you just chasing the next
So people just pivot from all crypto to AI right now.
Yeah. Or like crypto to AI, or like, another one was like maybe a pivot from, I don't know, SocialFi to now stablecoins or something else, right? Which a pivot is fine, but if you're just chasing narratives and then the more you do that, like you're building a track record of what you did at each thing, right? And so it's okay to do that, but then we'll dig deeper into what happened at each project, because it can take multiple iterations for you to find something that hits. But if you're not persisting through different ups and downs, then it's a risk that you're not going to persist with this current one that they're pitching either. So that's one indicator. And then like how well they understand the market, how well they understand their competitors, how well they communicate about what the product does, is like the sort of basic stuff.
So for the first time founder, what's your advice for raising money for the first time? What's your fundraising advice?
So I would definitely try to identify the funds that you want to raise from and the investors that you raise from, but don't like go and do your first crack at pitching at them, at your top choices right away. Practice it on your
on your
friends, on your like potential angel investors, other senior people that's working in the industry. It could be like BD people, right? Because like BD people are hearing sales all the time and they hear pitches all the time. And then you speak to some maybe second, third choice investors. That way you can hone your pitch and like definitely get feedback from how people are perceiving your pitch and the idea and the project, and even things like the raise amount. to get more data points, right, on how well you're able to communicate it and whether this makes sense. And then when you are approaching funds, do some research into what
narrative they're looking at.
Yeah, what themes they're looking at, and then who specifically in that fund is the right person to talk to. Because if you talk to the wrong person, like that might just close your doors prematurely because they just don't understand the market, or if they have a good internal system of communications in place, then they'll forward you to the right person, right? But I've seen cases where that doesn't happen, and that individual you talk to at your target fund just passes, and then like that's it. So yeah, identify the right themes and like the person to talk to in your target firms.
Is that a mistake to go from like the biggest guy? I've seen some advice. They're saying that most founder, they always go from like the top guy from the VC, and that guy probably like so busy, right? And then the second choice probably go to the analyst role, which is like these guys, they don't really care. So I have heard some advice that it's like they recommend the founder to always talk to the principal, because like they have enough time and they are like big enough to make decisions. Is that like how legit is that advice?
I think it depends on the internal dynamics of each fund. How it would work for us is that if you go to anyone on the investment team at 1KX and you pitch them the project, they'll know who to direct you to if they're not the right person. But
how many people at 1KX?
25 in the whole team, but on the investment advisory team, it's 8 people.
So I think that's maybe the benefits of a smaller VC, because it's like everyone just know each other. They can connect help passes.
Yeah.
Maybe that's a bit more problematic in the like bigger VCs, right?
Yeah.
What's the best question founders can ask for a VC?
So one of the.
How can you help me?
Yeah, exactly.
That's probably.
Yeah. If they don't ask that during the first call, then I usually ask, what are you looking for in your lead investors besides the capital? And they usually, they usually have things like partnership, introductions, go-to-market strategy, and things like that. And like tokenization is also one thing that comes up. But yeah, definitely ask what are the VC's specialties and strengths, and also their thesis. After you're doing the pitch, what is their feedback to you on the idea and this product? Have the first call be a conversation, right? Not like a one-way thing, because you want information from them too. It's like a matchmaking thing. So definitely evaluate if the value that this VC brings is actually what you need. And when you're composing your cap table with multiple funds and investors, right? Try to make the funds that come in complement each other in the types of support that they can help you. The best. Yeah,
what's the best structure of a cap table?
It depends, right?
I see 1KX like to lead around.
Lead or co-lead.
Yeah.
We like to co-lead with someone who, have, for example, they're more. They have connections in like TradFi if like a portfolio company is building in that direction, and we're more on the crypto native side. So like that's a good complement. It's like crypto native, but then also maybe like Web 2 kind of traditional industry go to market. And then I think the most valuable information that a founder can usually get about a certain VC is by talking to actual portfolio founders of that VC who has been in the portfolio for a while. So actually when we, in the offer stages...
It's like not what you say, but what you actually did to the previous investors, right?
So when we're at offer stages or final stages, we actually offer, that they can reach out to, like get connected with our portfolio founders who has been in the portfolio for a while, and they can like do a reference check. Yeah. It goes both ways, right? Like we can do a reference check on them, and they can do a check on us.
But the thing I see right now, it's like when you talk to all the VCs, everyone just say they are value add to the projects. Oh, I'm gonna help you with marketing. I'm gonna help you with introduction. I'm gonna help you with blah 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 blah. Right? They can say all the thing they want, and then like some may do what they say.
Yeah.
Some may just ignore you completely. They just like invest and then that's it. Fuck off.
I mean, that's when you find out from their portfolio founders, right? If they actually say what they mean. So we actually give examples of, like concrete examples of the latest instances where we help projects with go-to-market or tokenization or and so on. But the best signal is connecting them with an actual founder and talking to them.
What's a typical value added for the founders? Is it more like just introduction? What's a typical in your experience?
Yeah, I mean, it could be introductions to potential customers, introductions to like go-to-market advice and support is a big one as well, strategy. Introductions to, for example, like I focus on the wallet space, right?
Okay.
So I have a lot of connections to wallets. And if, let's say, a middleware kind of API company want to get connected with wallets, then I can introduce them to the wallets, and that's already like value added because it's like a list of 50, 60 wallets where I have like
You have all the contacts.
We have all the contacts, but then also
relationship as well.
just research on how they operate, like their strategy, like fundraising, things like that.
How about your DPen? Like what's value added?
For DPen, it's a lot of tokenomics mainly.
Oh, right.
So
because you cannot help them with all the Web 2 stuff, right? It seems like too physical.
Yeah, the Web 2, that's why DPen as a category is just very horizontal, but the expertise that you need is within that specific market, which is different, very different across DPen categories. The way we help DPen is through tokenization, like tokenomics modeling, and that's where our token team comes in. Like we've published revenue reports on DPens, on like tokenomic design of DPens, and we've built quite a brand in the DPen space because of these reports. So that's where like
any cool case studies for the DPen that you help.
It's like reports on the general DPen market.
So more like a research report, more like a data insights, right? Yeah,
and then insights from like emission schedules and tokenomics of what worked in the past that we can then like help bounce ideas with that project.
So you basically act as like a data consulting firm. It's like, you gather all the data, like what works, what doesn't work. You guys should do this because it's going to result in X percentage increases, right? Yeah,
I mean, I would say the tokenomics advice and support is one offering of our platform team.
Offering that depends on the verticals. For the DPen, that's tokenomics. If it's DeFi, maybe it's growth, right?
Yeah, for DeFi, maybe it's integrations, distribution.
What's the difference between a good VCs and a bad VCs? The good VC love you. The bad VC pretend that
a good VC
they're loving you.
A good VC is honest with you.
Okay.
That can be that doesn't necessarily mean they're like nice all the time and you're like, like everything's going great.
Yeah, have to be a bad cop sometimes.
Yeah, they identify like they know your blind spots and they give you like nudges for you to course correct when they think things are like hitting a wall or going wrong, and they're actually providing support. But then the flip side of that is that they can be a good sounding board for you when you're like feeling lost as well. You're still in the idea maze, like things don't gain traction as you hope they would, or if you were relying on some standard to take off and it doesn't, then you're navigating a pivot, and so they're like a good sounding board for you as well. And it should almost feel like it's a team, right? Like a VC is part of your team because they have ownership in the company as well and like stake in it doing well. So I think like
they have to give tough love, right? If
yeah.
If the founder get lost, they have to be the one that's like, hey, this is like what are you doing?
Yeah, and they have to be, ideally they're proactive about it.
Yeah.
You know, they are constantly communicating with the team. So usually I have like bi-weekly or monthly calls with the portfolio founders that I'm looking at. And so we have a good idea on how the company is doing at any given point in time. And that's a sign for good operators as well, is that they send out monthly updates on how the product is doing, and then they ask. So they send the updates to investors, and then they have an asks section for like what help they're looking to get. Yeah.
So basically, constant feedback, constant update.
Yeah.
I think it's similar to like finding true friends in life. It's like true friends when you are lost, they have to like give you a tough love, right?
Yeah.
It's something that you don't like to hear, but they would say anyway, right?
Yeah.
Compared to like all the sweet talking.
Yeah.
Ass licking type.
Yeah. So I mean, the VCs that don't really check in and they kind of like invest and then don't do anything, are not good VCs. Like they're just not differentiated from the good VCs. They're just everyone else. But then on the worst end of that is like just short-term VCs that are just looking to make a quick flip and then getting out.
I think this is a very, very interesting insight.
Yeah.
So if you're a founder, sometimes you have to maybe act a bit more stupid. So act stupid and then pretend that the VC is gonna point you towards the right direction. Whereas like if they are bad VCs, they just like kind of like agreeing with you all the time. Whatever you say, they agree.
Yeah, I mean, agreeing with you all the time is not helpful,
Yeah.
right? It's not helpful because that's not what you want.
Advisor, that's not what
you want a partner to like work with you to build this, and I think just constant communication and it's a trust building thing as well, because usually when you're in a founder's shoes, if things are going bad and I have investors, I'm like, if you don't have a good relationship or if you don't have trust with that investor, then I'm not gonna feel comfortable going to that investor and being like, hey, things are going bad. But then ideally the investors know when things are going bad, right? So they know how to help you. They know to help you.
So when shit happens, if the founder call you first, then it's good.
Yeah, then it's a good relationship. Then it's a good relationship. Like you don't want everything to seem okay and everything seems silent, and then one day the founder's like, oh, we're out of runway, and then like it's too late, right? Yeah.
Okay. กู VC โอเคอีกอันนึงนี่ไม่เกี่ยว I have heard all the weird stories all the time, all the what they call like the hidden stories. It's like you see like some maybe probably these guys are not like from the tier one. These guys are like, hey founder, we believe in you, we're gonna invest in you, we believe like let's go together, like we're gonna do everything for you. And then it's like once they get the deal, 2 months later they sell it off on the OTC market.
This is like a token deal or?
Yeah, token deal. Because like at the OTC market, it seems like it's like opaque to the normal traditional investors, right? But then it's like maybe some rumors that they actually sell. So I think that's may give VC a bad rep in a sense that they're more like they promise the world to the founder and then they just like betray them for the money.
But do you know what fund that is? Like not to name it, but like, do you know yourself what fund did that? Okay, but
I know the people, but yeah.
I feel like if you do stuff like that, you can only get away with it once, right? Maybe like 2 times. But then if you know it, like other people will know it.
Yeah.
And if the founders are doing due diligence on the VCs, and this gets about, like it's still a very small space, and
it's a very short-term game.
Yeah, and people have reputations that takes a long time to build, but it can get destroyed overnight, right? So the same thing works if you're going to do things like that. Yeah, so I would say like those types of players won't really...
They won't last.
They won't last long, but there'll always be new people to come in to do that in the space. So that's why reference checks are really important. Like just know who you're dealing with.
But it's just sad that it's like some of the VCs are good, but then all the bad reputation, it's just all the bad reputation come from these guys, right? That's caused about a lot of misconception about all the VCs.
I mean, I guess there's also that dynamic in the industry in general, right? There's a lot of good stuff being built, and then scammers just take all over the headlines, and everyone sees crypto as a scam.
Yeah.
So unfortunately, like people pay more attention to bad news than good news, because
that's
usually
human behavior,
yeah, because usually the good news is like it's not one thing overnight the way FTX crashed, whatever. It's like it's gradually gaining more adoption or getting more or getting traction overnight, and then in the long run, like the bad players will always be there, but you just have to know who you're dealing with.
What's the one mistake that you're glad that you made early?
I think finding a wrong co-founder fit, I would say.
That's not an easy task.
Yeah, but it taught me the importance of finding the right co-founder, right? Not just for my own project, but when we're evaluating a potential investment, we try to look at the whole team, or at least the whole founding team, and the dynamics between them. Usually the first call is just with one point person, with the CEO, but then we try to meet with the co-founders as well to see the dynamic, and yeah, usually anywhere above 3 co-founders is like a bit tough, because there's so many. The more co-founders you add, the more the risk compounds of like someone's gonna disagree with someone.
So the sweet spot is 2 and 3?
Yeah, 2 or 3 is common.
Solo is not good, right?
Solo is good if you're like a really good founder, but usually it's rare to have all the
combinations of those skills.
Yeah. Usually you have a technical co-founder, you have a good go-to-market person, strategy person.
I think at YC it's like maybe only 10% of the accepted candidates are like solo founders, right?
Yeah.
Like very, very low.
Yeah, it's good to have a co-founder that gels well with you, and you have complementary skill sets. A good sign is if they've worked together before. Like let's say they were part of a team and they have known each other for years. That's a really good sign. If they had just met each other like last week at a hackathon and then decided to do something, then
that's a red flag.
That's a flag, right?
But I think even two co-founders is so much better than the solo founder. Like sometimes like it's about your gut. It's like maybe one you can give up. Like there's no one to rely on. But it's like if it's 2, it's like this guy's counting on me. Yeah. So I have to do my shit. Otherwise, this guy's gonna. Yeah. It's like motivate each other.
Actually, the point about the meeting at the hackathon thing. One of our portfolio company founders actually met at a hackathon. Like it's like 3 people, and they're like a very, very great match, a very great team. But that's a rare case, right? So I'm saying it can happen, but
most of the time they are arguing about something.
Most of the time they fall out over something that only gets revealed over time as you get to know each other. With this team, it's really good, but that's a rare case, I think, for you to meet your fellow founders and having not worked together before, and then have it work out. So yeah, like it's a good sign if they have built a product together before and are now founding something else. Yeah.
So what mistakes did you make? Like how do you end up like how do you meet your co-founder and how do you discover that this one is not right?
We actually worked together for a few months, a year. But then the project that we started had 5 co-founders.
Oh, 5.
All kind of like knowing each other around the same time. And like having worked together, but like peripherally, not in a deep way.
Yeah.
And yeah, it just quickly fell apart. So I think I have like.
So it's about conflict, right? It's about like maybe the decision making is slow. Maybe some guy, it's like politics within the team.
Yeah.
Like a bunch of conflicts.
Yeah, it's like just too many cooks in the kitchen. If you have even like too strong conflicting egos, then that's usually enough to have things blow up. Because imagine a team of four co-founders or 5 co-founders, right? Let's say you have 2 really strong ego ones, and then someone who's more agreeable or someone who's more neutral or quiet, then
that's gonna be 2 sides.
It's gonna be like 2 sides, and then it's gonna
fuck up.
Yeah.
What's the most stressful part of the job?
I'd say context switching. If I have a day where I have to context switch a lot between different markets, then it's like I need to ramp up my brain to do the next thing that's unrelated to the previous thing.
Yeah.
Whereas that's why developers and coders hate that, right? They would rather be in deep work, deep focus, and then just focus on that. I would say in VC, it's not, unless you carve out the time to just do research on that one thing or like do diligence on just one project, then it's like a never-ending thing coming up all the time. And sometimes it's urgent, so you have to context switch. So that's kind of
I think that's very normal for many people.
Yeah.
It's like, I think they have a study of like, when you switch tasks, it takes some time for you to like get back into the zone, right?
Yeah. So I try to block my meetings into one like time and then have most of the day being like unstructured, where I can do.
There's so many unproductive meetings.
Yeah.
I guess.
Yeah.
That's not stressful, but it's annoying, right?
Yeah. I mean, but it comes with the job, right? Like it's not annoying, but like sometimes it's just not a fit, and you can kind of feel it right away. Yeah.
Is being a VC, is it really fun? Is it fun?
Yeah, it's fun. It's fun to have a really high level overview of where the world is going and the different like talented builders that are executing towards it, and being able to work with them. I think the travel and meeting new people is fun for me as well. I mean it's not as like privileged or prestigious as you say, like as you said in the beginning. I don't think it's very busy, but yeah, I mean I'm having fun.
So what if, let's say you cannot be a VC, so what are you gonna do besides?
Honestly, I'd spend more time like writing and researching, but not in the context of deals. Like right now I'm writing and researching in the context of potential investment, right? But I think if I weren't a VC, I would go back to the time where I was writing again on my own terms, because that's really fun.
That's actually make crypto fun. It's like you can like research on whatever the things you like. You can write on whatever the thing you like to write. Right now it's like you have to be doing like only 2 specific niches, right?
Yeah, I mean I can do like what I'm interested in as well, but it's just I don't have time, and it would add more context that I have to switch, right? Yeah.
Yeah. How can people follow you?
I'm on Twitter, X, Nichanan.
Nichanan.
Nichanan K. All one word. That's where most people can find me. And that's it. That's my main platform. And then my old website is in the same name, nichanank.com.
That's it. Thanks for listening.